Hey everyone, welcome back to Corporate Decoder, the place where we decode the sometimes crazy world of corporate finance. Today we're diving into Unity Software's latest 10K filing. Get ready because this one's a bit of a roller coaster, but hey, at least it's not a game with loot boxes. First off, a quick heads up, Unity's using their upcoming proxy statement from their annual meeting, which will be filed later, for some of the details. That means we'll get the full picture on everything from director info to executive pay in the future. Unity's all about providing the tools to create and grow games and other interactive experiences. They've got software that covers the whole development process, and that includes using AI now, from creating prototypes to keeping a live game running smoothly. People use Unity across a wide range of industries, not just gaming, but also things like retail, automotive, even architecture. They merged with Iron Source not long ago to expand even more. Their business is split into two main areas: Create Solutions, which is all about the Unity engine and the stuff you need to build cool things, and Grow Solutions, where they try to help their customers make money from what they create. Unity's facing some stiff competition. On the Create side, they're up against other game engines and 2D/3D design platforms. For Grow, they're competing in a very busy advertising world against giants like Amazon, Facebook, and Google. They see themselves competing on things like being able to work across different platforms and the quality of their products. But of course, it is not all fun and games. There are a few things that Unity themselves admits could cause problems. One of these is that they have a history of losses and might not actually make money in the future. They're putting money into things like research, sales, and expanding into new industries. If they mess up managing their costs, they might not become profitable. Because tech changes so fast, Unity needs to keep releasing updates and new features to stay competitive. They need to be careful in their plans to reset and focus on their core stuff. If they don't succeed, the company is exposed. Also, Apple or Google could change their rules and policies, and that could hurt Unity's business. And finally, lots of folks in leadership positions have recently left Unity. If the company doesn't address the whole, it could harm their business too. Also, the report mentions cybersecurity, which may expose the business to regulatory fines in certain jurisdictions. Alright, let's move on from the risks and jump into the numbers. The filing tells us that as of last summer, the total value of Unity stock held by the public, not including company insiders, was about $5.6 billion. Their stock trades on the New York Stock Exchange under the symbol. Don't expect a dividend check anytime soon. They're planning to use any profits to grow the business, so the hope is that the stock price goes up, and that's how investors will make money. Now let's get into how things are going financially. To keep track of how the business is doing, Unity looks at a few key numbers. One is the number of customers contributing more than $100,000 of revenue. These are the big spenders, and they're really important. The other one is dollar-based net expansion rate. This tells them whether existing customers are spending more or less money than they did before. In 2024, dollar-based net expansion rate was 96%, down from 111% in 2022. Total revenue is $1.8 billion. It has been decreasing year after year. In 2023, it was $2.1 billion. Breaking down the numbers, Create Solutions brought in $613 million. Grow Solutions was about $1.2 billion. But the total revenue is down compared to last year. Mostly, they say, because of Create Solutions revenue, and this is in turn caused because a big contract with WetaFX ended and a portfolio reset. Their Grow Solutions revenue was also down due to competition. It costs money to deliver all of this, of course. Cost of revenue includes things like salaries, hosting expenses, and amortization, which is an accounting term to describe intangible assets. Gross profit, which is revenue minus those costs, will go down, they say. Operating expenses are things like research and development, sales and marketing, and general costs. Most of the operating expenses were for employees to fix things up. They did cost cutting, like reducing their employee workforce by about 25%, which resulted in some one-off expenses. They had some gains when they bought back some of their debt for cheaper than what they owed, and they earned some interest on their cash savings. They are subject to income taxes in the United States and all the countries they work in. Because they do business all over the world, changes in currency rates could hurt their profits. Also, events in the financial services industry, like banks having problems, could mess with their business. If they lose their relationships with their partners, then the revenues will be affected. They need to have great customer support or else they will lose customers. And finally, if their data gets stolen or hacked, all trust would be lost. In the future, they may need to attract, manage, and retain more talent, which is critical to the company's success. If their branding and marketing fails to resonate with their consumers, they would also be in trouble. They are subject to rapidly changing and increasingly strict rules and laws, including GDPR, the European Union's General Data Protection Regulation, which require them to pay attention to global privacy and data security and the protection of children. There is a high risk of cyber attacks given the current global situation. So how are they managing all of this? Unity's management, including the top executives, checked their disclosure controls and procedures as of the end of 2024. They think these controls are working well enough to make sure all the important information gets reported correctly. Okay, that was a ton of information. Now, what's my take on all of this? Unity is at a real crossroads. They have solid technology and a presence in a growing market, but their recent financial performance has been bumpy. To put it nicely, they are exposed to lots of risks and global volatility. They are also reliant on the success of their clients. The big question mark is whether they can turn things around. The portfolio reset and cost-cutting moves are a good start, but they need to actually deliver on the promises of the changes. They need to show some kind of growth and actually earn money. There will be big problems to come, but the company has great leadership in place. Right now, the stock looks pretty risky, but based on Unity's potential and current performance, I'd suggest a hold. We need more results to make sure they are back on track. I would say a reasonable price to buy would be around $20, $25. Thanks for watching. If you found this helpful, give us a like and subscribe for more corporate deep dives.